you actually know, you have to consume a lot of videos before you can actually understand how liquidity basically works in the market. Hey guys, welcome to my YouTube channel, Ademola, and on this video, I'll basically be explaining liquidities for you, ways you can basically spot liquidities in the market, ways liquidities present itself in the market. Because one thing you don't want to do is you don't want to like be taking out in your trade before trade start moving in your initial direction. Because most of the time you say that you have your analysis and market still went in your ways, but market like took you out before actually like go your initial direction. So all these things are basically because of your ability not being able to spot liquidities the right way and the right time. Because when you are able to spot liquidity, you know where to place your stop losses, where to take your entries, and where to take profits. Because you want to prepare or take profits at the nearest door on liquidity where liquidities are present. Because one thing is markets liquidity that moves markets. So markets moves towards where liquidities are in the market. So basically, I'm not going to be explaining three main ways which you can basically spot liquidities easily, or three major ways which liquidity presents itself in the market. So basically, without wasting much of our time, let me dive into it fully. So if you are new here, please subscribe, like, and share. And also, if you have been following me as well, like, share, subscribe, and comment, so that I'll be encouraged to do more videos like this. So let me basically dive into it. So like I said, I'm also going to be talking about three major liquidities in the market. So the first one is trendline liquidities. We have trendline liquidity. Number two, we have equal highs and equal lows liquidity. Equal highs and equal lows. Then the last but not the least is ranging liquidity. Ranging liquidity. So I'll take it one after the other, be explaining it, and also give us a chart example of it. So first of trend line liquidity. Trend line liquidity, most of the time you're like in our charts, you see something like this in the market, where markets create series of higher highs or values. For example, if you're in an uptrend, you see market doing stuff like this: higher high, higher low, higher high, higher low, higher high, higher low. And probably you probably have your POI or something around this area. For instance, let's say we have a POI around this area. Maybe you have a sell limit around this area. Okay, you have your sell limit around this area. Then market was basically creating series of higher highs and higher lows in the process of it approaching your point of interest. So you see all these lows you see markets created, like market was forming in the process of it approaching your POI, all we call liquidities. Trend line liquidities. Trend line, let me draw my trend line here. Then this everything here, sorry I'm not having a perfect drawing, but you basically get the idea of what I'm trying to say. So basically here, this trend line is a liquidity for the market. So what are you expecting? Because of the market approaching your point of interest and creating series of higher highs and higher lows, the market goes to your point of interest. Market to do what? Market to surely come back and take out those liquidities. It's actually like presented when it was going up, because you see all these lows, they are liquidity, they are pool of liquidity there, because you see this probably SMC trend line traders, you see them taking, some people taking their buys other here, taking their buys other here, taking their buys other here. So what the market wants to do, this market is basically on liquidity, market will come down here, clear this old trend line liquidity, clear them out, take them out, because most people won't take their profits here. It's probably due to greed or something. The market will come down here, take them out first before probably moving in an opposite direction or continue in our initial direction. So one thing is, you don't want to when you see markets coming down here, probably tap into your point of interest, start selling. You don't just want to jump in at the middle of that liquidity and start buying. Let me present this as an example whereby situation whereby probably you have a moving car on highway, then from middle of nowhere, just came out from middle of nowhere to the front of that car. So if you had for that car to stop for you, and most of the time the car will probably hit you and take you out. So this is just the basic this is just the scenario here also. This market has basically tapped into our sell point of interest coming down. It is basically doing what? Clear every liquidity is like it's presented here. So you as an SMC trader will probably like see your like your point of interest, or you have any strategy you trade, you might probably see your point of interest here, and probably like decide to like go for long position, probably because you saw your order block here, your inducement present, your break of structure present, your fair value gap present, then you decided to say, okay, let me take my long position. Yes, the market will come into your POI and just give you a sort of view once profits. It says that you can just market can just sorry. Okay. It says that market can just come into that point of interest like this. Sorry, let me clear this out. Okay. Market can just come into your point of interest like this. After since the market is selling back, can just come into your point of interest like this. Then give you this kind of little movement. Maybe you'll probably see little profits here. Then do what? Come back here and take you out. Because there are others here, the market need to like declare out. So we are supposed to place your take profits since we are expecting the market to take out this general liquidity. As the market like came to your point of interest, you put your sell position, your stop loss above your point of interest, cover the necessary places you're supposed to cover. Then your take profits will be markets clearing out those general liquidity. And where is it? This is the end of the trend line. So you just wait for market to like do its thing and clear those liquidities out, and then you take your profits from there. So in a situation, some situation whereby some people will just like be greedy and just extend their take profits without any necessary reason for them taking it. And market will just come clear this liquidity, general liquidity, and after clearing it, I just decided to like change direction and start like buying. I don't know if I'm making sense. So all these things will just make you like basically understand where you can basically place your take profits and your stop losses. There's also like this thing also applies to in a position whereby we have been our buy limit. For instance, you place your buy limit here. Maybe you have your buy limit around this area. Maybe you have your order block, your breaker block, or whatever strategy you trade. You have it here. So let me clear this out. Let me clear this out. The market did what? The market was approaching your point of interest. One thing you pay attention to is whenever you are taking your trade, probably maybe you are taking long position or short position, you should like make sure you study and observe the way market approach your point of interest. That kind of thing will help you to like know how you are basically going to place your stop losses or take profits. So in a position whereby you have this like our POI for to take our long position, then you see market creating a sort of lower low, lower high, lower low. In place of it approaching our point of interest, we have this, we have this, we have this, we have this. The market did what? Come here. So what are we expecting? We're expecting market to come back here, take out all these general liquidities, take it all out before probably changing position or continue buying. So you see, and one thing is you should like make sure you know how to draw your trend line well. And I'll take my time to like create another video where I'll be explaining the perfect way to like draw your trend line. But one of the most important way is you should make sure your trend line touches at least two body. Most of the time also body of the candlestick. At least it must have at least two touches. At least two touches. And the more the touches, the stronger the trend line. So basically you have this trend line already. What are you expecting? Market to come out here, take it out this trend line liquidity before change direction or before continuing your initial production. So since you are taking this, what are you supposed to do? Put your short long two here. put your take stop loss below your point of interest and covering the necessary places, because there's sometimes where your liquidity will be like present below your point of interest. So probably see like some weeks or so. Make sure you cover every necessary weeks. Then your next target should be this nearest liquidity, this trendline liquidity, market clearing deals, trendline liquidity. So let me go to the chart and basically show you a chart example. Okay, sorry. Okay, let's come to this chart example. This is GBP USD. GBP USD 4-hour time frame. Now, you see this POI here. There's another block here. There's a liquidity here. This liquidity is another form of liquidity which I'll be explaining next. Okay, so when the market was basically approaching our point of interest, it was giving us some series of lower low, lower low, lower high. This lower low, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then you can basically see me where I place my like trend line there. I have this one, first touch, second touch, third touch. You can basically see like the my trend line respected this the downtrend of a thing, and I didn't force it. Now, what am I expecting? I'm expecting market to then when I saw this thing, I saw the way market was basically reacting when it was getting to my point of interest. The market coming to my point of interest, I did what? I buying. What I was expecting market to this other block to hold, push price to break this trend line. Then once it break this trend line, what am I expecting? For the price to go up as high as clearing this liquidity at least up to this point at first, before going to clear this liquidity above if we are still bullish. But firstly, I'm expecting market to firstly you can still see this trend line is still also present here if you trace from this side. So, but first of all, to be on the other side, I'll firstly be targeting this place as my take profits first. You can see my stop loss below my POI, then my take profits here. Then you see for some people doing take profit 1, take profit 2. So my first take profit will be here. Market clearing these trend lines up to this moment, up to this line, up to this line. Then if market breaks this, then I hold on to like to this moment to clear this liquidity all out. And I can basically see the market is already like clearing this trend line liquidity. So if probably you saw this thing, then you're having like the vibe to short this market before, then you're an SMC trader, for instance, then you saw this market, you saw your order block present here. This is an order block here. So order block present here. Your inducement is also present. Your inducement is also present. You can basically see it. Your beacon structure is also present. And if you don't basically know all this I'm saying about this SMC, you can basically check my previous video where I basically explain basic concept of SMC. Then your fair value gap is also present here. So which means every confluences you are supposed to like have to take a short position here is basically present. So you decided to do was to place this is a live chart. This trade is still actually like still playing, but I'm just telling you what will mostly happen. Although markets will see like most of the time, sometimes do this thing, but basically a lot of time this is what the markets will basically do. You see, when I was explaining this also when I was explaining. Then you place your stop loss here, do this thing. Probably you place your take profits. I don't know. Maybe you place your take profits here. Probably somewhere around there, or to clear this whole thing out here. Or the trend line also here. So you can see the market is basically reacting. Sorry, let me clear this out. You can basically see markets already reacting in this at this point of interest. Already reacting, and anybody who took this trade will already be happy because they're already in some profits, like a good profit here. This is already in more than 1 hour profit. So anybody who's taking this trade already will be happy. I'm seeing trade, but markets a lot of the time you come back, you just give them some sort of reaction here. just basically reacting to this other block. What do I expect the market to do? Market will just do something like this. After getting to the right point of interest, do something like this, drop here, then do what? Take them out, then continue clearing the liquidity. You can also come here, also just give them some sort of reaction here, also like this, come out, take them out onto this point or this point. So this is just like a live chart. The market is still playing out, but that's what I expect like the market to do. So people taking this trade here are just taking trade blindly because they don't know how to spot liquidity. They don't know how to, but this is the market clearing a China liquidity, and this is an emotion already. So you just coming here to short the market is just of you to try to stop a moving trend. So that's just basically it. Another example is a trade which I took today, and I already took profits on this trade I'm showing, but this time the trade is still running. But I already did I think 7 hours or more than 7 hours, so I already like took my profits, and this is the trade. Now I took the first trade from 2 hours time frame. First trade from 2 hour time frame. You can basically see my other block here, which I use my inducement here, fair value gap, everything present, pre-curve structure for this first one. Then I joined the sell here at the 15-minute time frame. You can also see join this first one, second one, third one, and fourth, and this is the fourth one I'm expecting. So market has not come back here. Now, my first take profit from here was at this point. For markets to get to this point. For markets to get to this point first. Why? You can basically see that when market was basically approaching our point of interest, it was giving some sort of, it was giving this vibe of higher high, higher low, higher high, higher low, higher high, higher low, higher high. You can basically see the market doing that in approaching our point of interest. Then market got to our point of interest and did what? They started selling. So when the market was still selling, there's some people that probably might try to like buy this market here. Sorry, let me just clear this out. You can probably see people probably like taking a long position at this point. You can see markets basically reacted off this breaker block here. You can basically see markets reacted off this breaker block here. This one present, breaker block, everything present here. So they'll be happy that okay, their trade is already moving. Meanwhile, the trade is just basically reacting to this point of interest to go back and test this other block to continue selling. As you see, markets came here exactly. Sniper entry came down, continue selling. 1, 2. Now, my first take profit was this general liquidity, take out this general liquidity first. Now, you can also see after like at this third entry also, the market also did the same thing to them. Those people who can't spot those liquidity properly, they probably join this and that other block is here. You can see another other block here. Yeah, the market reacted of it to come to my third entry or fourth entry, then continue selling. So the market just take them out because market is not done clearing this out, this general liquidity. You can see the market clear this general liquidity. Now what am I expecting? I'm still expecting the market to take out all this. There's not general liquidity here. I'm still expecting the market to take it out up to this moment. So that is why I left all my mini position to this place to run to this position. So I don't know if I'm making sense. That was it. Now that is the first liquidity which I explained. Now the second one is equal highs and equal lows. So equal highs and equal lows in the market are also liquidities. So basically, you see people who trade chart pattern most of the time are the one that usually fall for this type of liquidity most of the time. I see market doing something like this kind of equal lows, something like this, equal lows. It was not necessary for the lows to be very equal, like to be equal, to be on the same line like that, but they're supposed to be like close. If you're not on the same line, you're supposed to like close. See market is creating this equal lows or equal high, something like this. So people who like who trade chart pattern do like trade this thing and a lot of time do fall for like the liquidity because this equal high their liquidity market because others are here. Some people who trade chart pattern like probably be shorting this market, and also people who trade SMC also probably have their breaker block here, expecting the market to do what? Before market got to this point, expect the market to like tap them in, continue selling. But surely once that is starting is market will still come back to clear liquidity. So basically, market can just come back. Sorry, market can just come back, can just come down here. After some time, go back. That's all this breaker block or any point of view is there. That's there and what continue buying and take out this equal highs liquidity. I don't know if I'm actually making sense. So I same thing also like apply to these things. So let's go to the chart and show us these things. Now this same GPUSD also see a perfect example of equal lows. This is a this low and this low. You can see this line here. See that they are very equal, very equal highs and lows. So there are some people who are probably going to be like taking their trade from this place because it's sort of other block at this place, or probably any other reason why they are trading. Market reacted off the place a little bit, came down and take them out. So what you want to do is you make sure all these kind of liquidity are clear to your port of interest, so that once market comes to clear them, can just tap you in and start moving your own direction. I don't know if I'm like actually this thing. You see, the trend line liquidity I actually like explain that market is going to come back to take this people out. See that market is already going back to that point of interest, sold and is already buying back to that point of interest. So you see how this thing is going to like play out later on. Now, USD card also. Let me just show you another example of equal highs. You see this USD card also. This high and this high, they are very equal highs. So market do what? Came there, clear it out and do what? Start selling. So equal highs and equal lows are also liquidities to the market. And the last but not the least is ranging liquidity USD. So ranging liquidity. So in ranging liquidity, you see markets going from support to resistance. So resistance, support, just moving between support and resistance. You see market doing something like this at times. Now, how is this liquidity? There are people who chase support and resistance. Those people who chase support and resistance, we place their orders here and here also. Here also. You can basically see it. So you see market getting to this resistance. People who take support and resistance will like sell from here. Market sold, get to the support, bought, get to the resistance, sold, bought. So what am I expecting market to do? Is market to do what? Break either to the downside or break to the upside. Now, here is the key. Try to listen to this side. If you have a situation whereby the market is ranging like this, and market broke to this side first, then market usually do what? Go up to go and clear the buy side liquidity. Buy side liquidity. Like this sell side liquidity and this buy side liquidity. So basically, the market to come back up here and like do what and clear it out. So once you have your like your point of interest, your buy side liquidity here, your sell side liquidity here, your buy side liquidity here, sell side liquidity here, sorry. So situation whereby you have your point of interest, maybe probably below this range, below this where the market is ranging. And market did what? Market broke to like to where your POI is forced. Like when after the market stop the ranging, it do what? Break down to your point of interest. Then you are like safe. You are supposed to take profits. Place your take profit above this resistance here or around this resistance area. Because market surely was go back here and go and clear this squeeze before doing another thing. But if by any means markets didn't break down to your to your point of it to where your point of interest is first, instead of markets to break down to this side first, markets went up back and broke to the upside, then this your point of interest is not safe. You have to do what? It will be advisable for you to cancel your limit because market is coming back to clear everything here, everything below. So that's just basically what I'm trying to explain. You can also go back to your chart and you see a lot of examples there which you can see do your back testing, your forward testing, and you see. And thank you for watching this video up to this moment. Please don't forget to subscribe, like, and share this video. And so as I'll know the kind of video to drop next, and I'll be motivated to drop videos. Thank you for your time, and see you at the other side.